Good morning. My name is Braxton Montier, and I'm here with, would you like to introduce yourself?
Sure, Chalise Westenskow.
Wonderful. And you are a divorce financial advisor, correct?
Correct. Yes. So I am a financial planning. We have a wealth and financial planning practice, and then I'm a certified divorce financial advisor as well.
Cool. Well, I have a couple of questions for you. My first question is, how do you typically get involved in a divorce case? At what stage are you usually involved in the process?
It just depends. Usually pretty early in the process. I would say most of the time clients will come to me because they're overwhelmed and need to know what's going on, right? So it's pretty typical to be engaged pretty early in the process so that I can help get organized, gather the data that we need, and then just sort of be part of that team going through divorce. I will occasionally get post divorce clients, so maybe they have a decree and they have no idea what it means. So now it's understanding the decree. So I do get a couple of those, but for the most part, pretty early in the process, either clients finding me or a referral from an attorney or a mediator.
Wonderful. What role does a financial advisor play in the division of assets during a divorce? And how do you make clients make informed decisions about the asset distribution process?
Yeah, great question. So, my role is to provide objective analysis. So, I will help clients understand what they own, what they owe, the income and expenses, and then from there, we will illustrate different scenarios. So, we'll start with kind of a 50-50 split, cutting everything down the middle, just for fun. And then from there, we start to make some educated optimizing dis- distribution of assets based on what they have. But yeah, my role is to provide data and education, basically clarity.
How do you approach the valuation of assets like businesses or retirement accounts and real estate during the divorce process? What kind of challenges come with that
With
process?
with valuation, so yeah, businesses, different type of business structures. Typically, it depends, but typically need valuations. I'm not a business evaluator, so I would partner with someone that does those in-depth, detailed analysis. But we can get pretty far with tax returns, profit and loss statements, and budget sheets from a business. So, and then with real estate, it's working with appraisers to really get those clear values.
Wonderful. Have you ever had a problem with somebody seeing the actual value of an asset, but claiming that, this is actually more special? This appraiser just doesn't realize how special this thing is, that they kind of rely more on an emotional value of an object or something.
Sure. I mean, what isn't emotional about divorce, right?
Yeah.
Yeah, that happens a lot. And what I try to do is really take the emotion out of it and provide that objective numbers advice. Really, all we can do is show them what the numbers are, what the appraisals are, and from there they can decide. It depends on the type of structure if I'm working with both clients, but we can take the numbers and go from there. It's their divorce. So, but yeah, there are sometimes discrepancies um, between what someone feels is the value, and um, you just have to walk through it, talk through it, communicate, and give perspective.
Okay. Um, how do you help your clients understand the long-term financial implications of their divorce settlements, particularly when it comes to retirement savings or the tax implications of spousal support?
Yeah, we do pretty in-depth analysis that will illustrate just about everything in their financial life. So again, we work really hard initially to gather all the data and really fine tune and understand all the assets, all the debts, all the income, and what it costs for them to live. From there, we projected out 30 years in the future. So you can literally see a timeline of what things look like based on how we're dividing things on a pre-tax and post-tax basis, when we need to start liquidating assets and the tax implications there. And then just from there, trying to make good decisions on dividing assets in a tax efficient manner. I know one thing we look at all the time is if there's one spouse that's a higher income earner, maybe in a higher tax bracket, and the other spouse maybe is in a lower tax bracket, talking about keeping different tax buckets of assets, right? So maybe the higher income earner keeps more of the cash and the Roth IRA assets, and the lower income earner will keep the 401k, because ultimately they're both keeping more of that pie chart, more of the money. So we do try to really optimize for both parties, whether I'm advocating for one spouse or both. We're always trying to look at how can we keep a bigger piece of the pie.
Wonderful. What are some common mistakes that you see divorcing clients make when it comes to their finances, and how can they avoid these pitfalls?
Okay, so one great resource, I used to run the Second Saturday workshops. If you have any clients that are just need sort of a crash course in divorce, it's a really good resource. Wife.org or Second Saturday they've got great free resources. But in that workshop is 12 pitfalls of mistakes. So I won't go through all of them, but the main one is not having enough cash initially. It's amazing how once you go through the process, accounts are closed, credit cards are shut off. So
Yeah,
once you're kind of thinking about going forward with divorce, start putting money aside for yourself. You're going to need it for retainers, for expenses, therapy, the kiddo expenses. You're just going to need it. It's always going to be disclosed. We're not hiding or being, shady in any fashion. It's all marital. We will divide it. We will declare it. It's just you need it. So that would be the biggest one. Start preparing, start talking to some professionals. It doesn't mean that you have to file for divorce when you talk to an attorney or a mediator or a financial person, but you're gathering knowledge. Start getting your records in order. Reach out to me. I have kind of a data gathering form that I'd happily send out, that sort of gets you organized. Start gathering tax returns, start gathering pay stubs. What does it cost for you to live? We need to know those expenses. Start gathering investment statements and retirement plans. And then where we can kind of help too is overlooking certain assets. Maybe there's compensation plans, stock options that we're just not thinking of, or frequent flyer miles. A lot of people have acquired, points on their credit cards or things that have a monetary value, but we're just not thinking about it all the time. Also, don't overlook things now like Venmo, PayPal, Cash App. I mean,
yeah,
so much of our expenses and our financial lives are done on these apps that are sometimes we just forget about it. So yeah, just sort of thinking outside the box. So those are
wonderful.
a couple. I have
Yeah.
more.
And I know we spoke about this a little bit earlier, but can you explain the tax implications of divorce settlements, particularly when it comes to alimony, child support, and asset transfers, and how divorcing individuals can minimize the tax burden?
Yeah, great question. So divorce is not a taxable situation unless you sell stuff. Once you sell, you could have capital gains or losses. That those typically follow the asset, so it would depend on how things are divided. Retirement assets aren't taxable. You get to transfer assets pursuant to divorce without a taxable situation. Alimony and child support are not taxable um, any longer. Well, child support never has been, but alimony is no longer taxable um, or tax deductible either. So it's really not a taxable situation. The one tax issue that we see a lot is selling the home. So your marital home, you each have 250,000 capital gain exclusion. So if you have more than $500,000 in equity in the home, you could have a taxable situation. The other the other thing to consider is if you're going to keep if one person is going to keep the home and take the other spouse off title, but they're going to be selling within 6 years, it might make sense to stay on title together because you have 6 years to both get the capital gain exclusion. Otherwise, you lose that person's 250 and then it could be a taxable issue going forward. Um, that's basically that's the big ones.
Well, it would be pretty terrible if you're kind of the whole settlement is riding on the sale of a house, only to find out that you're not actually getting it as much as you thought, or as much as you need. You may be walking away with nothing, if you have arrears or something, and you have to spend it all just to get out of the situation, and then you come to find out that you actually don't have any more money than you needed. So. I can see how that would be really stressful for some people. How do you handle situations when one spouse is more financially savvy than another? How do you ensure that they both receive fair treatment during the divorce?
Yeah, that's a great question and happens all the time. And it makes sense, right? We have roles in a marriage, just
Yeah,
as little as taking out the trash. Everybody has these roles. And so it's very typical for one person to have handled the finances.
yeah,
I find I typically work more with the one who didn't handle it because they need some clarity and some education. The best possible thing we can do is just educate along the way. When we can list out again all the data and what it means and show you, illustrate timeline. Okay, year one, here's what it looks like. Year two, year 10. um,
yeah.
and educate you along the way as to what it all means, it's really key in alleviating that stress and anxiety. And then you can start to make good decisions. You're not paralyzed by the unknown. So I would just say education along the way is the single best thing you can do when you're unsure of your finances.
Wonderful. Um, and I believe we've covered this a little bit, but the specific strategies that you use to help clients maintain financial stability after a divorce, especially if they're concerned about maintaining their lifestyle or supporting their children. I know you said, as soon as you start the divorce, start putting money away, but what can you do after the divorce, after the ink is drying on the decree? How do you maintain the lifestyle that you had before?
Well, you can't always. Sometimes you can't. So again, we always do a budget. So we know what our expenses are and we project it out. So if we know right away while going through divorce that the assets and the resources last throughout our lifetime, then we know. And if we need to make adjustments, we will know right away. When you're going through the divorce process, you have to fill out a financial declaration. So you've got to understand your income and expenses. I would say creating a budget post divorce is so helpful. And working with me during your divorce, you'll probably have a good idea anyway, but even post divorce, it's time to do a plan. What does this decree mean? What does it cost to live? Where am I going to pull the resources? Do I need to get a job? Or am I good? You just really need to create a budget and understand where we're pulling resources and when, and then
Wonderful. Um, what advice do you give clients when it comes to managing or dividing debts in a divorce, especially in a case where a spouse may have a significantly more debt than the other? What one person incurred major business expenses or invested in something. something like that?
Oh, yeah, debts are hard. I think just trying to get a full picture of all the debts, get your credit reports, make sure that we're not missing anything. Try to separate everything that you can. I really try in my divorce cases to diminish the debt by using resources if we can, so that it is a fresh, clean start for both
Yeah,
parties. Um, so yeah, I would say get a credit report. Both spouses need credit reports. Make sure we're not missing anything. Try to take names off of things that you can. And for the marital debt, that's part of the negotiation. But if at all possible to leave the marriage debt free, do it. I know that this is we've I had a situation where it was very young clients. They both had 401ks, very young, low tax bracket. So we were able to they each quadroed each other the assets to pay the debt off because they knew they had very little in tax implications and nothing but their future to make more money. But it was important for them. In that case, it made sense. It doesn't always, but anytime you can leave the situation debt free and just clean, fresh start, I think is setting them up for success later. Um, but yeah, I would encourage the both spouses to try to get their own credit established, shut down anything that they can that has both names, just kind of dotting I's, crossing T's with
yeah.
that.
Yeah, the last thing you would want is to think everything's taken care of and then 10 years later find out that they didn't take your name off of something and you're on the hook for, even if it's a small amount of money with interest over time will grow to be a huge beast. So,
Oh, absolutely. Well, and even in the house situation we talked about before, if you're keeping both names on title and one person's taking the mortgage and living there, how does that other person know that the mortgage is being paid if their name's on it, right? Like you really want to be thorough in that decree and provide statements, maybe monthly, quarterly. Nowadays it's really easy because you just log in and you can
yeah,
pretty much have access to that mortgage and make sure it's being paid responsibly. But
yeah,
yeah, there's risk associated to that for sure. You just need to be aware of and protect it. Protect your credit.
wonderful. Well, that was the last question that I had. Um, where can people, find you in your services if they need help in a divorce?
Yes. So Chalise Westenskow, and you can find me on the AFCC directory. Also, the IDFA directory, that's the credentials for certified divorce financial planners. A lot of people find me there. Inventa Wealth Advisors is our firm here in Sandy, Utah. And I believe we're on Facebook, Instagram, all the things. But
Wonderful. And thank you very much.